Hey, what's up, everybody? It's February 27th, 2021. It's Saturday. I'm going to go over gold, go over what happened on Friday, that massive sell-off. And I think it's a direct correlation between what's happening in the 30-year bond market. And I'll show you that here. Also, I haven't really paid as much attention to silver, but it's still very strongly outperforming gold, too. So I think that's something to definitely take a look at. And I know a lot of people, including myself, got on the wrong side of this trade for sure on gold, and it hurt, man. It definitely was quite the trap. Let me put it that way for all the banks, institutions that pushed this thing lower. It was a crazy move right off of the support here. So you can see we have this big triangle consolidation here, and the 1760 level, holding as support as it had in the past. And you can see here's the touch here, very strong area. And what's interesting about this, though, as well, is with what's happening with the dollar and the way it's just been breaking down over the course of the year, 2 years now, really. Let's take a look at the DXY. You can see here is that same area. Now, this move happened, though, before. This was already in the works with gold, and we were in the same kind of triangle consolidation, and this is playing out perfect, off of this bounce here. Here's the 161.8% retracement. So, my thoughts on this as well is, man, we could gold, or the dollar could be in the midst of quite the turnaround. We'll see how long it lasts, but this, if we go out to the daily chart and you're looking at the dollar index, and it seems like there's a lot less correlation with the dollar index and gold as there used to be, but there's quite a correlation, at least the way it played out, with the risk off coming on and the markets looking super shaky, right? So here is, this is the inverted head and shoulders, and man, we retested the bottom area down here, cleared out these positions that were being held, price just ticked them off, and now I think the odds of us moving higher here are pretty high, especially as we bounce off this 161.8% extension level. So we might see some temporary weakness in the dollar as we kind of come back into this consolidation here, maybe pull back a little bit, but we should be in line for a move higher to at least test this level, maybe before we move lower, or if this dollar strength continues and the indecision in the market continues, then this thing's going to keep going. So this is an interesting setup here. I want to show you. Let's go bonds, government bonds here, and the big sell-off that happened on Friday, right? And trading forex. I'm looking at what's going on in indices and gold and everything else, but I'm not really checking the bond market, I guess, as I should, right? And so as much as I should, right? And so have a look at this here, right? We have this big divergence here on the RSI, and of course, divergence is divergence. It can stay that way for a long time, and it's not the end all be all. But man, look at this. This is just the sell-off in this. And if you're measuring just the trust and faith with everything going on, right? So this is 2020. You can see a huge drop in sentiment here because this is coronavirus and nobody knows what the hell's going on. And here is the market recovering, which you can see here pretty plainly, right? And this was through the course of 2020. If we're using this as a barometer to measure risk appetite, then you can start to see it recover, right? And so you could see this correlated in the US stock market with, you know, this huge rally that's been going on. And well, you know, gold's still kind of holding solid here, but now you see this, what looks like quite the bearish candle on the 4-hour and the reversal. So like you can see we have a nice moving average cross here, which could be a sign of a bigger move lower and more strength for the dollar if we're looking at these different correlated markets, which, you know, is one of my big strategies, is to, you know, pick up the clues about what's happening in all these other places. So that's the bond market. Now we go back over here to gold and see how that correlates. And you see right where that cross happens, you know, we had this support right here, and this was just a trap, hook, line, and sinker market set, and then boom, we dropped through, and I'm gonna move this Fibonacci here, and let's see where our extensions are for this next move. That was our last push out. And we broke below the 161.8 here, and look, we're perfectly retesting it. So to me, this looks like it's setting up for a move lower. You know, we have this level here, this kind of channel that we got going on. So something to pay attention to is, as we move lower, if we do, and the dollar gains strength, what I showed you on the dollar index, we got that momentary pullback in the dollar, and then more continued strength, which would, wow, this would make sense right here, especially as we correlate that with these lower levels of support in gold, 1680, 1690. I'd say this would be that next level of support there. So it's going to be, the markets, you know, new stimulus got passed, but the dollar strengthens, right? So you would think that because the new stimulus passed, that would push the markets higher, but no, not at all, right? Like maybe that ship has sailed, that we're like, you know, we can't, and this is my opinion the whole time. Here we go. I had that on the wrong Fibonacci. So we are right at the 161.8% retracement. So maybe a bounce up to here or to this former level of support will take us lower to these lower levels down here. So next week's going to be a big week for the dollar, and I'll definitely be paying attention to that, and, you know, paying close attention to the bond market, as I use that as, especially now, after what happened on Friday. Make sure I add that to my watch list. For sure. So if this is correct, then this has a long way to go, and we could see some huge risk off coming into the market. So thanks for watching. I appreciate you. Click the link below to get started, and you know, and to join one of my groups, get in our Telegram channels, and let's see how this plays out. You know, we have January, we have February, we had the election. Now, you know, all that kind of has settled. We have the new president in here with whatever's going to go on with that. Who knows? And now the markets are going to have to digest what is, you know, the future outlook of what could be happening for our country because of that. And right, judging by this, the markets don't lie. It's not looking at it favorably anymore. This was a nice, healthy recovery, and with strong risk appetite. And this does not look well. So you know the saying, like, the numbers don't lie, and this is it. So thanks for watching. I appreciate your support. And if you got hit with that gold, you know, trade like me, all you can do is manage your risk and get ready to move on. You know, there's always another trade for sure. That's why your risk management plan needs to be into a T, and that is the most important thing you can have as a trader. So thanks for watching. I appreciate you, and let's crush it this week. Let's crush it going into March and this spring trading session. Peace.